What if a piece of code could trade better, faster, and smarter than any human alive? Today, we are breaking down how AI completely changed trading and the hidden traps you must avoid.
Let's jump right into this explainer. Today, we're looking at one of the most high-stakes crossroads in modern finance, the wild world of automated trading, and specifically, the absolute non-negotiable need for human oversight. Seriously, it's all about finding that perfect balance between letting the machines run and keeping your hands firmly on the steering wheel.
We've all seen the dream being sold online, right? The whole hands-free, passive income fantasy. You just flip a switch on a trading bot, head to the beach, and let the algorithm literally print money while you sip a margarita. Well, as our source material points out pretty clearly, trusting technology blindly like that, it can be a very, very expensive mistake. The stark reality is that leaving a bot completely unattended is just a massive financial risk. Think about it. Algorithms don't have intuition. They don't watch the morning news. They definitely don't sense market panic. They just rigidly follow mathematical instructions based on past data. So, when the market does something completely unprecedented, a bot in a vacuum doesn't know to hit pause. It just keeps firing away.
And that brings us to the core danger here: over-reliance. Depending entirely on a trading bot is, well, it's incredibly dangerous. Why? Because that bot is only ever as good as two things: its code and its internet connection. It's not some magical, infallible money-making genius. It's just software. Actually, scratch that. It's just code running on a machine. And let's be honest, we've all had our laptops totally freeze up just trying to open a simple email, right? When we talk about over-reliance, we're talking about surrendering your entire financial decision-making process to a machine. To really grasp why that's a problem, we have to look past the hype of AI and get down to the nuts and bolts. Because as we know, the nuts and bolts can and absolutely do break.
So, looking at those nuts and bolts, there are basically four major points of failure that can completely cripple a system, and I mean without a single second of warning. First up, API disconnects. The API is basically the digital bridge between your bot and the exchange. If that bridge drops for even a fraction of a second, your bot is suddenly flying blind. It can't see prices, can't execute trades, boom. Next, server outages. Doesn't matter if it's your server or the exchange's, if the cloud goes down, your strategy just comes to a dead halt. Then we've got bad data feeds. Algorithms live by the rule of garbage in, garbage out. If a feed glitches and reports a price off by just a few decimal points, the bot acts on that fake reality. And finally, hidden bugs in the algorithm. No code is perfect, right? There could be a tiny flaw buried deep in the system that only triggers under some weird, highly specific combination of market conditions.
And here's the scary part. When things go wrong with automated trading, they do not go wrong slowly. Our sources note that if an automated system gets caught in a faulty execution loop, it can wipe out a whole trading account before a human operator even realizes there's a glitch. It's a brutal sequence. Step 1, that hidden bug we just mentioned gets triggered by some unexpected market spike. Step 2, a faulty execution loop kicks off. The bot actually thinks it's doing the right thing, aggressively buying or selling over and over, just fighting the market. And step 3, the entire account is wiped out. Because AI operates in milliseconds, this whole 3-step disaster, it can literally happen in the time it takes you to get up and pour a cup of coffee. The exact same speed that makes a bot so powerful is exactly what makes it lethal if you leave it unsupervised.
Which really brings us to the core philosophy of doing this right. It's captured perfectly in this quote from the source material. Artificial intelligence is the ultimate co-pilot, but it should never entirely replace the pilot. I mean, it hits the nail right on the head. Think about a modern commercial jet. These planes are packed with unbelievably sophisticated autopilot systems that can practically fly the thing from takeoff to touchdown. But airlines don't leave the cockpit empty. The human pilot is always there. They're monitoring the systems, interpreting crazy weather patterns, handling unexpected emergencies, and making those final high-level executive decisions. In trading, you are the pilot. The AI is there to help you out, ease the workload, and execute your flight plan, but no way is it there to take your job. In practice, your AI co-pilot is perfectly suited for the heavy lifting. We're talking data filtering, rapid backtesting of literally years of historical data in seconds, and executing trades without a shred of emotion or hesitation. Machines are just infinitely better at those specific tasks than we are, but the human element, it is absolutely irreplaceable when it comes to the macro-level strategy, meaning overall capital and risk management. Only a human can look at the big, messy macroeconomic picture. Only a human can look at the news and say, you know what, the market is acting totally irrational today because of some geopolitical event. Let's dial down our risk exposure. Basically, the AI handles the micro-level tactics, while you, the human, command the macro-level strategy.
And this is exactly why this whole explainer matters for anyone looking at the markets today. Technology has for sure leveled the playing field. The kind of algorithmic execution and massive data tools that used to be locked away inside multi-billion-dollar Wall Street hedge funds, they are now right there for everyday retail traders to use. You finally have a fair shot. But, and this is a big but, having access to the tool doesn't guarantee you're going to win. As the source material emphasizes, now it's up to you to use it smartly. Your success depends entirely on striking that optimal balance. It's all about leveraging the incredible speed and discipline of the machine, while fiercely maintaining the wisdom, the caution, and that big picture oversight of the human mind.
So, as we wrap things up, I want to leave you with a pretty crucial question to think about for your own portfolio. If the market does something completely, totally unprecedented tomorrow, will your AI be your savior or your executioner? The financial landscape is shifting so fast right now, and understanding how to properly mix human oversight with algorithmic power isn't just a nice-to-have advantage anymore, it is absolutely vital for survival. Take a hard look at your systems, check your safeguards, strike that balance we've been talking about, and never, ever forget who is ultimately flying.